Good morning to you all, and thank you for coming to the presentation of the merger between Vodafone Australia and Hutchison 3G Limited. And I've got a PowerPoint slide here of all the main points that I'll be speaking through, so follow through with me if you like. On to the first PowerPoint, companies in the proposed merger. Now we have two companies in this merger. The target company is Vodafone Australia Limited and the acquiring company is Hutchison Telecommunications Limited. Vodafone Australia Limited are owned by Vodafone Group plc and they are the world's leading mobile telecommunication company. Hutchison Telecommunications Australia is owned 87% by Hutchison Whampoa Limited. In 2003, they introduced Australia's first 3G mobile network. Outcome of the merger. The outcome of the merger will be a 50-50 joint venture with a new company trading as Vodafone Hutchison Australia Proprietary Limited, owned 50% by Hutchison Telecommunications Australia and 50% by Vodafone Group. VHA will market its products and services under the Vodafone brand and will hold all rights to the 3 brand in Australia. Now next you'll see I've done a bit of a diagram of the structure of the new company. So you'll see that Hutchison Telecommunications Australia and Vodafone Australia will each hold a 50% stake in the company, the new company being Vodafone Hutchison Australia Proprietary Limited. Now next we have the key dates of the merger. So as you'll see, on February the 8th, 2009 was the announcement of the proposed merger. The following day, on February 9th, HTAL released statements to its shareholders of the proposed merger. On February 11th, ACCC commenced review under the Merger Review Process Guidelines. On April the 1st, the ACCC published a statement of issues outlining some concerns that they have with competition. The following day, HTAL held a general meeting with their shareholders and the shareholders voted in favour of the proposed merger. On May 29, 2009, the ACCC announced that they would not oppose the merger. And on June 9, 2009, Vodafone Australia and Hutchison Telecommunications merged to become Vodafone Hutchison Australia Proprietary Limited. Now we've got the type of merger. So the merger is a 50-50 joint venture between the two companies. It's a horizontal merger as both companies operate within the same industry. It's a friendly takeover. The merger is an agreement between the two companies to merge. And it's a strategic acquisition as the two firms are predicted to be more profitable together than they are operating as separate entities. Now some benefits of the merger. So by combining their businesses, they'll operate a strong mobile operator and they'll significantly enhance the scale and profitability of the merged company. The estimated combined revenue is $4 billion. They'll build on the strengths of both businesses and they'll be able to create value through cost savings, what they've estimated to be $2 billion in the first year. And also they'll have earnings accredited. The offer that's proposed between the two companies is that Vodafone will receive a $500 million deferred payment, and this will be structured as a shareholder loan to VHA. Vodafone will also receive an annual brand licensing fee of 1% per year of the service revenue of the company. Now we've got the effect of the proposed merger. So on February 9th, 2009, the day after the announcement of the proposed merger, HTAL shares hit a high of 0.14, highest over the last 8 months, and their volume increased by 527,000 to 2,592,000. That same day, Vodafone Group's share price jumped by 17.94 to 102.8, also the highest they'd been in 9 months. The post-merger performance. After the merger, these are the results that they had. So 6.9 million customers by the end of 2009. That's 900,000 more than they had expected. VHA's capital expenditure increased by 18% to 236.2 million. Their EBITDA increased by 19.6% to 227 million. They also won 4 Best of the Best awards by Money Magazine in 2010. On the Vodafone Group reports for the end of the financial year 2010, they reported 8% pro forma service revenue growth in the fourth quarter, and also cost synergies of $65 million to date. If you have any questions, feel free to ask. Thank you for coming to the presentation.